There is no better setup than the ICT Silver Bullet Strategy, and it forms every single day. You can quit your job in 90 days and become profitable by using only this strategy. It's extremely easy to understand, requires no daily bias, and it forms every single day. In today's video, I'll be breaking down the best ICT strategy and simplifying it completely so you can become profitable just by using this one setup. I'll be going through what is the Silver Bullet, what pairs and times does it form, a trade plan for the Silver Bullet, and how to find high probability setups, and also some tips and tricks that other people don't talk about. So let's get right into it. First things first, what is actually the Silver Bullet? The ICT Silver Bullet is a time-based trading model that works with liquidity sweeps, market structure shifts, and fair value gaps. This is one of the best setups to start off with, as it is extremely easy and it forms nearly every day. The creator of the Silver Bullet himself, ICT, said you can quit your job in 90 days and become profitable by using only this one strategy. Now, for the times and pairs, you can actually trade ICT Silver Bullet. You can trade it London. This is the London session for the ICT Bullet is between 3 and 4 a.m. NYC time and 8 to 9 a.m. UK time. And then we have the New York session Silver Bullet. This is between 10 to 11 NYC time and 3 to 4 p.m. UK time. Now, for the pairs, these are the 3 pairs that I've seen it work best on from my own backtesting. We have USD, GBP/USD, and NAS 100. Again, this is from my own personal experience. I highly recommend you go and backtest it yourself and find what pairs work best for you. Now, for the actual trade plan for the ICT Silver Bullet, the first thing we are looking for is liquidity before the actual Silver Bullet timing, okay? All we need to look for is full liquidity. That's all we're looking for. This could be the previous day high/low, previous daily high-low, Asia session high-low, London session high-low, previous week high-low, equal high or lows. Again, simple as that. All we're looking is for liquidity. Now here, you can see this is the actual Silver Bullet timing right over here. So this would be either, if I go back here, either 3 a.m. NYC time or 8 a.m. UK time, or if it was the New York session, it'd be 10 a.m. NYC time or 3 p.m. UK time. Now you can see we've marked out all of our liquidity. We have some equal highs here, we have a low here, we have some equal lows here, and we also have a high right here. The next thing we look for is for market to take out this liquidity that we have marked out. Again, this is what we're looking for. You can see market did take these equal lows, sorry, this low right over here that we have marked out. Market took this low right over here. Now, after this liquidity sweep, we wait for a market structure shift with a displacement. Now, all a displacement is strong candles / volume, okay? If market moves in a series of strong candles with high momentum and volume, that is a displacement, and if it breaks structure. Now, you can see here we have the liquidity sweep. First thing we did, we obviously marked out our liquidity, wait for the liquidity sweep in between the Silver Bullet timing, which is between, quickly go back so I can explain it to you guys, 3 to 4 NYC time, 8 to 9 UK time, 10 to 11 NYC time, 3 to 4 PM time, UK time. Again, it's really, really important you look if you're trading the London or New York one. Now you can see here we have our market structure shift. Because we took sell side liquidity, this is a really important thing to note. Because we took sell side liquidity, we wait for a bullish market structure shift right over here. You can see we took sell side liquidity. After, we got a bullish market structure shift. Why? Because we broke above this high right over here. And why is this high the latest high that we're looking for? Because it broke this low right over here. Now, we mark out the first imbalance that caused the market structure shift with displacement. This is where we enter from. So you can see we have an imbalance right here. We have an imbalance right here. We want to mark out the first ever imbalance that caused this displacement that then also caused the market structure shift. Now you can see this is our imbalance right over here. Now, just some rules of what we actually do when we enter a trade and how to enter the trade. You want to target opposing liquidity for a minimum of 1 to 2 RR or 1 to 3 RR. Again, it's really important that you target opposing liquidity. Don't make your profit target random. So don't make your profit target, if we were, for example, selling the market, don't just make it hit. It needs to be a reason why you are putting your profit target where you are putting it. So make sure you take opposing liquidity. This could be an opposing order block, an opposing imbalance, opposing equal lows or highs, a high or low. Again, just opposing liquidity. Now, next thing you want to make sure you do is you want to enter off of the 50% of the imbalance. That simply means you enter off of the 50% mark right over here. Now, stop loss is below or above the swing high/low. So our stop loss would be right over here. And again, you want to make sure that your stop loss is a minimum of 3 pips. Okay, that's really important. Make sure your stop loss is a minimum of 3 pips. Now, this is how the result actually looks. Okay, we have marked out our liquidity. After we've marked out our liquidity, we wait for a liquidity sweep. If it is a bearish liquidity sweep or we take sell side liquidity sweep, we wait for a bullish market structure shift. And here we had our market structure shift right over here. Now, all a market structure shift is when we close above the high with the candle. You can see we barely closed above this side of the candle, but we still closed the candle. And we also want there to be a displacement. This was a displacement because it had a series of strong candles right over here. Now, we want to enter off of the imbalance that actually caused this market structure shift, which is right over here. We enter off of the 50% zone, which is right here. Stop loss just below the low right over here, you can see here. And we want to target opposing liquidity, which could be this side right over here for minimum of 1 to 2 RR or 1 to 3 RR. Now, hopefully you guys understood that. If you didn't, don't worry. I'm going to go on a live example and break down the same exact trade step by step, explaining why exactly I'm doing what I'm doing. But before I actually go into the live example, if you're looking for hundreds of thousands worth of trading capital, completely guaranteed, make sure you go ahead and click the link below in the description. Again, we will pass your challenge completely guaranteed. If not, you get your full money back plus the challenge fee, essentially making it a zero risk investment on your end. We also offer top tier high probability signals you can use on your live funded account. These signals have roughly an 87% win rate. Not only this, but we give you the best ICT mentorship in the game. So if you are struggling to learn ICT and you need like a bit of a fast track into learning ICT and being profitable at ICT, we have a mentorship for you, hundreds of hours worth of ICT concepts simplified into a simple mentorship. But again, if you're interested, simply go in the link description below and join the Telegram. Alright, so I'm here in the live chart. We're going to be trading the New York ICT Silver Bullet timing. This is between 10 to 11 a.m. You can see my trading view is calibrated to New York time. It is UTC -4, meaning that we are in New York time. I'll also be using the sessions indicator. This was just going to be telling me when that ICT Silver Bullet starts and ends. Again, we know that it starts at 10 and ends at 11, but this indicator is just more automated and you can see it a bit better. Okay, so this is our Silver Bullet timing. And again, for pairs, you can either trade GPUSD, EURUSD, or NAS 100. We're going to be trading GBP USD. Now, starting off, I'll just quickly remove this. You guys can get that something. Apologies. Now, starting off, first thing we want to do is we want to mark out our liquidity. Okay, we have a high here. It's quick. We have a high here. We have some equal highs right over here. We have a low right here, and we also have some equal lows right here, or more of a low right over here. Okay, now we've marked out our liquidity. Now what we're going to do is we want to wait for the actual ICT Silver Bullet to start. Okay, the ICT Silver Bullet has started. The time for you can see is 10 a.m. New York time, and it's going to end at 11. At 11, we can't take any more trading setups. We won't be looking for any trading setups, but if you do get in a trade during the ICT Silver Bullet timing, it's completely okay to hold it outside of the ICT Silver Bullet timing. Now, if I play the market out, you can see we are forming more equal highs. I wouldn't really say this is liquidity sweep, reason being we're just forming more equal highs. We haven't really wicked above it that much. Mark out again. We've built on these we've built on this low, so now we have equal lows right over here. Now here we have our liquidity sweep right over here. Okay, we've had our liquidity sweep. All of this other liquidity is now irrelevant. It might be relevant to target opposing liquidity for our take profit, but right over here we had our liquidity sweep. Okay, simple as. Now what we are looking for is a market structure shift. If I play the market, we're simply looking for market structure shift. The market structure shift I'll be looking for is of this high right over here. I want a market structure shift of this high here. This is the next market structure shift I'd be looking at if we do go ahead and break below this low. We haven't broken above that low. Okay, so this is, okay, putting the market out. This is the next market structure shift I'll be looking at, and also this one right over here. Either of these highs would be okay for market structure shift. Keeping the market out. Again, we have a new point we'd be looking for our market structure shift. It's this one right over here. Clean the market out. And right over here, we have a market structure shift with a strong displacement. So all of these highs become relevant. Now, why is this a market structure shift? Well, it's a market structure shift simply because this candle closed above our wick or high right over here, making it a market structure shift. Not only is it a market structure shift, it also has a strong displacement right over here. As I said, displacement simply means a strong series of candles with high momentum, as you can see right over here. Now, what do you do from here? From here, we find the imbalance, that caused the move. Again, we have a couple imbalances here. We have one imbalance here, and we have imbalance here. This is the imbalance that we'd be interested. Why? Because this is the first imbalance that caused this market structure shift alongside this displacement. So here we have our imbalance right over here. We would enter off of the 50%, so it'd be roughly around here, and our low, it could be right here or right below right here. Again, it's really important that you have a minimum of 3 pips. So this would be okay right below this low, but it's really important you have a minimum of a 3 pip stop loss. Now, next thing we want to do is we want to look for opposing liquidity to target. Now, what can we target? I said aim for 1 to 2 or 1 to 3 RR. So literally this high would be okay. Why? Because it's a 1 to 3. This high would be okay. That would make a 1 to 3.87. These equal highs would be simply okay, and this high would be okay. All of these are equal points to target. Again, you can target this, you can target this, you can target this. All of these are valid. I'd be more conservative and I'd be targeting this high right over here. If I now play the market, see what happens. You can see we are wicked in our entry. Play the market out, our take profit has been hit. As simple as that. And again, just a way to grasp if you are on the 50%, simply look if the imbalance is on the 50%. So you can see roughly this is the 50%. A better way to do this would be by getting the Fibonacci tool, having the 1 and 0 and 0.5 marked out, and just simply marking it from here all the way to here, and then you can get a really good understanding of where the 50% is. Now, you could have even targeted these equal highs, I think, for 1 to 5 nearly. If I go on a higher time frame, quickly play this out, just so you can see if that would have been valid to target. So yeah, you can see even those equal highs for nearly a 1 to 5 would have been completely valid to target. Again, it would have lasted a bit longer. You were never really in drawdown, but obviously you would have lost float and profit and you might have panicked. Again, so that's why it's better to aim for the more conservative spots, like here, for example, the most recent high or the most recent equal highs. But yeah, that's literally all there is to the silver bullet. It's as simple as that. It doesn't require any daily buy. Sorry, nearly forgot how to say that word. But yeah, it requires no daily bias. Again, it forms nearly every day. A good way to get a grasp on this is just simply by backtesting it. Make sure you're using on GPUSD, EURUSD, and NAS 100 to get a good understanding of it. Again, that's all from today's video. If you did enjoy it, please make sure you like, subscribe, and also comment if you need any help with any ICT videos that I can help you guys with. But yeah, that's the end of the video, and take care.